Thank you for tuning into the All Fun Investment Podcast. This interview is with Globe 3 Capital and features Matt Lason as well as Jeff Embry. Matt Lason is the managing partner and CIO of Globe 3 Capital. He's responsible for portfolio management and allocation strategies. He spent 25 years in the financial services industry, including 8+ years options market making. Jeff Embry is a managing partner and handles investor relations for Globe 3 Capital. He spent years in the technology industry involved in both the software and hardware side of the business. 15 years ago, he pivoted to the financial industry, where he focused on financial planning for both high net worth and ultra high net worth families. He also provided strategic allocation, and during his time at Fisher Investments, he helped grow the firm from $5 billion in AUM to over $49 billion in AUM. In this episode, we discuss strategy, research, diversification, the U.S. regulatory environment, and more. We hope you enjoy this episode. Check out the links in the description to connect with both us and Globe 3 Capital Management.
But yeah, the uniqueness part of it, it's really amazing, Skyler. We talk to these hedge funds and they all buy the same thing. And, we're actually now, which is exciting, some fund to funds have been reaching out to us. Yeah. We just had a meeting last week with a great one. And, there's a lot of overlap. They're looking at, they want to incorporate 4 or 5 funds, and 3 of them are, buying Chainlink, Polkadot, Ethereum, and Bitcoin. And so, what value are you getting there? And so we've really just kind of fell into it by accident, but we noticed it early. And that's part of our pitch now, is just sharing, hey, we'll get you into a space you're not going to get into. And we think this is where the value is anyway.
Yeah, no, that's great. I think just a lot of folks I talk to, a lot of fund managers, that's like, we go anywhere, we can do anything, we'll chase the yield, for the best opportunity. I like the fact that you guys have guardrails and a process in place. You don't do NFTs. There's certain things you won't do, and you stick to that model. I think that works well.
It's so easy to get distracted. I mean, I can't even tell you the many dozens of times where I've had my money in these projects. I've had it for years. This little shiny object comes along. I'm like, man, I should sell it all and put it into that thing. Let me buy some more Pepe. It's really hard to withstand it. For the new person, it's almost impossible. So
right. Well, it's a bit of emotion intelligence too. It's like you got to control take the emotion out of it, right?
Yeah, absolutely.
Well, and it's funny. I used an example when we were talking. We had that AI position that fell in backdoored the AI, and we saw that go from 14 cents as our buy price. Matt, what did it hit?
58, something like that. Yeah.
Yeah. Wow. So it went from 14 cents. Well, it was kind of 24, and then it went to 58, but our buy price was 14. And I got excited. I'm like, hey, we should be looking at some more AI. Should we get this? And now when I look back at it, I mean, Matt talked me out of it. He's like, we don't want to be chasing. I'm like, he's like, we already got
now's not the time. Yeah.
Right. And those things, just like I said when we were talking, they shot up because of the hype and just slowly have, peeled off and probably done worse than the other positions we have.
Yeah, it's interesting. It's definitely, like you said, the buzzwords out there. And I've actually gone down the rabbit hole of AI myself in depth, like creating my own software and all that with no code, and for doing stuff for this industry. But there's a lot of smoke and mirrors, right? People would say, well, this is what it can do. What it can really do is different. I do think, it will, for folks that are using AI, it'll replace folks that are not using it in some fashion, but it's not going to replace you. It's not going to replace your model, your philosophy, your how you run your business, right? I think that's what
maybe it could help you. Maybe you could help read white papers.
Yeah.
Maybe ask it, what are some flaws that you see here?
I wish it could help.
Give me a Cliff Notes version of that. Yeah.
Exactly right. Yeah.
Right. I wish it could help me write my quarterly reports. They're killers, and they're only 4 pages.
There you go. Absolutely. Yeah. I think it's I totally agree with you guys. I think sticking to what you guys know, not chasing the latest and greatest. I think that bodes well and it's a greid story too in my book, just how you guys operate. Just talking to hundreds of managers, and Mike, I'm sure, is the same on his side.
I saw in your offering documents, you guys had a quote. It says, if you are waiting for certainty in the capital markets, you will pay a heavy price for it. Where does that come from? What's that mean to you guys?
Yeah. I worked for Ken Fisher of Fisher Investments for 7 years in his early days. And he's very much a macroeconomist, behavioral scientist, what they call behavioral finance, the study of the mind and how all of us and all other market participate participants participate within the capital market structure. And one of the great things about that is just really understanding human nature and the cycles that we continue to go through. And it's why some of this can actually be a little bit predictable in the sense of at the extremes, the euphoria at the top and the absolute fear and panic at the bottom. And so one thing Ken used to often say is, if you're waiting for certainty in the markets, you're going to pay a heavy price for it. And what he meant by that was folks at the bottoms of bear markets, and you can see it in sentiment and demand. When you're at the bottoms, nobody believes, nobody is buying, the demand is not coming in, and the sentiment is incredibly low. You can see that in all the headlines, and you see that a lot in crypto right now. And so folks will wait until it's more certain. But at the same time, when it's more certain, more participants have already come in and are coming in, and you're paying a much higher price for it. And the way you can see that is at the tops with euphoria. That's when when Bitcoin was 69,000, 55,000, 60, that's when hedge funds, crypto hedge funds like ours were absolutely launching. We see that in the numbers. You see that in the market participants coming into the crypto and Bitcoin space. And you just see that euphoria and that, aha, we got through all that mess prior. And now we're certain this is going to be 200,000, 500,000, $1 million in the future. Well, that's when the risk is actually in, and more risk in the market when it was Bitcoin 69,000 than when it was Bitcoin 15,000. And so what Matt and I try and do is really understand that concept, continually remind each other of it, and flip it on its head, where we saw most of the water being wrung out of the towel when Bitcoin was at 30,000, 25,000, 20,000, rather than, when it was at 40, 50, 60. And so when people can get trained to think that way and be different at the extremes, you can really take advantage of it and actually lower risk along the way.
Well, and like Warren Buffett said, be greedy when others are fearful, and vice versa. We started Globe 3 Capital in a bear market. So that's what we've been telling our LPs the whole time is it's still so early, and there's still so many scams and so many moving parts. And there's so much negativity out there. You have to be able to see through that and see long term. And when you make purchases in a bear market, it's not supposed to feel great. I say the best trades I've ever made is when I've kind of felt a little bit, oh, is it really going to zero? You start to believe the hype. But if you really do believe long term in the space as we do, these are when the best purchases are made, rather than when, like Jeff said, when Bitcoin gets to 50, 60,000, when everything's going up exponentially. That's the easiest time to buy because everybody's doing it. But that's when you really need to check yourself a little bit, and probably should have bought it, 16,000 versus 50 or 60. But we just want to kind of tell people that, you really want to be, you really want to get in there when it doesn't feel, it's not about not feeling right. You have to believe long term. But once again, it doesn't always feel overly comfortable when you're, buying at these lows and in the bear market.
That's a great point. Yeah, absolutely. I'm just curious for both of you guys, just from as you kind of look at the markets and where things are at, everybody always brings up risk management, risk mitigation, right? From your guys' standpoint, what does that look like for you? And how do you go about deploying that into your strategy, into your mindset as you move forward in the space?
No, that's a really good point. And, as you know, Globe 3 Capital, when we started this fund, we needed to do two things. We had to be different, and you have to be right. And so to be different, we go after the small and micro market cap type cryptos, and that's the tokens. We're a liquid token only fund. And so we go over the small caps. We don't really deal with Bitcoin or Ethereum. Although we like those tokens, we want to give our LPs an opportunity to invest on the forefront of the protocols that are valued, down to around $20 million. And that's really what we want to do. And when you're in that space, there's already inherently a ton of risk. So what we do is I've spent thousands and thousands of hours doing research upon research. I've been into these protocols, using these protocols. We really want to familiarize ourselves with what we're investing in. And even though they're smaller caps, we need to be even more due diligent than, maybe doing stocks or anything like that, because there is a greater risk profile in what we're in, and we understand that. And what we also like to tell people is not only what we do, is what we don't do. So we don't buy NFTs. We don't use leverage. We don't trade options on our crypto. I used to be a derivatives trader. That was my expertise, but I don't feel we need to add risk upon risk. So we feel that our market area and our niche, what we're going after, is already risky enough. And it's just a ton of due diligence. And then we can get into where, when you're talking about tokenomics, we research the development teams. Tokenomics are very important, circulating supply versus total supply. We look very carefully at emission schedules. If there's a lot of tokens that are held by seed investors that are going to come out in 4 to 6 months, you got to see what that's going to look like in 4 to 6 months. If the circulating supply is going to triple, that's going to be it's going to be very difficult for that protocol to take off, at least in those times. So there's a lot of things that we factor in, and spent years of, like I said, doing this research to really take as much risk as we can out of it, but yet getting, our LPs as the best exposure possible.
A couple other things we do, just to add to that, is we diversify across sectors. So as Matt said, we might not purchase NFTs. He likes to say, I'm not a museum and I'm not a curator. And so we want to own the underlying protocols across many sectors in this space, and there's quite a few of them. So we diversify across sectors. We also don't short, to add one more thing to Matt's that we don't do. And we also believe, and it's part of the reason we launched, is we mitigated risk by launching at what we saw was at or near a bear market. Now, we're smart enough to know that nobody calls a bear market bottom. Nobody. We weren't trying to. So once we came up with the idea that, hey, prices are collapsing in April, May of 2022, and Matt had a bunch of friends and family, actually, because of his expertise, say, can I write you a check for 100,000? Can I write you a check for 200,000? And we were speaking one morning on my early morning commute, and I said, geez, you're up to about 800,000, maybe $1 million of folks that want to offer you money. He obviously couldn't take it. You just can't take checks in this space. Said, why don't you open a hedge fund? And so we got talking, and we spent about a month talking it through of, we don't think we're going to see this opportunity, getting 2017 pricing for 2022 at the time, adoption and technological advancement. And so we said, hey, if we're ever going to do this, this is the time to bring all of our experience to bear and launch at what we think is near enough bottom to a bear that our pricing, if we're right in that sense, what Matt said, we have to be right. We have to be right in that sense. And if we're correct, then the market pricing in general will take care of us. And then we have to make good decisions behind that. So one of the other things that a lot of people, I think, don't realize that gives you risk mitigation in our cryptocurrency space, digital asset space, is Matt and I, as he said, identify projects in the $20 million to $200 million range. Now, we just don't stay there. We want to identify these projects early, the foundation of the future of Web3, and ride them up, hopefully the top 50s and top 20s. But we also get the liquidity that you don't get if you're a venture capitalist in the traditional space of equities. So they will invest. They have to either go liquid, get a purchase, go IPO to exit out, or they go bankrupt. Here for Matt and I, one of the advantages we have, yes, we believe this is a higher risk, higher volatile space than traditional equities, but we have the ability to invest like we're VCs, like we're angels round, A round, B round, C round, when they're in that, the project is in that range. However, we have the liquidity to exit out of it if anything changes, if another competitor we spot is going to run over the top of them, or if the atmosphere changes itself, in 3 years we run into another bear market, et cetera. So that's all the different ways we mitigate risk, and we think it's going to be to our advantage.
And you mentioned diversification and how you guys diversify across different sectors. How do you guys, kind of think about diversification in terms of, your portfolio? Do you want, is it ideal for you to have 5 assets, or would you rather have, I guess what's kind of your ideal number? How do you guys look at that?
No, it's a great question. We look at a range of, I'd say 8 to 20. That's what we're starting right now. I would say currently we hold about 12. And really, we just continue to look at projects and see if they meet our token evaluation standards. And it's something that we want to invest in. And as new money comes in, we develop ways on how we add that position to our portfolio. But like Jeff said, we do want to be relatively spread out in sectors. We don't want to have 12 tokens in your metaverse and gaming sector. Although we like that sector and have tokens there, we want to be more spread out. So right now we're in between 8 to 20, probably about 12. And that can fluctuate. And as we were talking before, the nice thing is we're very mobile. We've had a couple projects have some issues. Maybe one was, we found out they were short on their treasury funds, and that was when everyone was going bankrupt. We didn't like hearing that. And so we were able to get in and out, lock in a profit, although we did like the project. And being mobile on those 2 examples really worked for us. And the projects since haven't done very well. And we were able to kind of reallocate money in some of the other projects that we really like. So the flexibility has been great as well.
And then one other thing to add to that, Matt often says, we're not the fund that picks 15 projects and puts 8.5% in each project. One of the great things about, the cryptocurrency space, it's very similar to the 1996 to 2000 internet, where projects would come out, they'd be new, they'd be exciting, they'd get a lot of momentum. And there were folks that could participate in those and roll into the next one, go from Yahoo to Ariba to Google, et cetera. And so Matt and I believe in the same thing. We've got projects that we've invested in that are in just a very short mode to going mainnet. And we've got other projects that we absolutely love, believe are future top 40s and top 50s, but they might be 4 to 6 months out and we don't want to miss them. So we'll go ahead and put a smaller allocation in those and a larger allocation in the ones that we think have imminent news, mainnet, get on some of the major exchanges, product launch, marketing partnerships, take that. And if we're correct and we get those green shoots, we can roll out and put more in the projects that are kind of next up, if you will.
What type of what are you guys seeing the most interest in right now? Are you guys interested in DeFi? You mentioned the metaverse a couple of times. What type of sectors are you guys most interested in right now?
That's another good question. We like them all is the easiest answer. I think one of the main questions that we really ask ourselves when it comes to these projects is, what are they trying to accomplish and how are they going to accomplish it? We do like a couple layer ones out there that we're super excited about, but we also feel there's layer ones out there that all they come forward with is, hey, we do another extra 1,000 transactions per second. There's really no other differentiation there. We want to kind of see them have a pathway as, what are they going to do? Who are they going after? Who's going to be their customer, rather than the next layer one that's going to have a few transactions per second a little bit faster than the other. So we really look at what they are trying to do. I don't think people ask that question enough and take a step back, and how are they going to accomplish that vision, and does it make sense? Are they going after the right niche? Is that niche viable? A lot of times I also hear, well, they're going after this banking sector that's $300 trillion. If they get 1% of it, we're all going to be rich. Well, how are you going to do that? I think that's just very broad, and we look for more specific routes on the projects that we look at. And we just feel very confident after, finding those. But we do like DeFi, gaming and metaverse. We have some layer ones in there as well. There's some NFT protocols that we really like. So it is kind of spread out, but that's really how we try to look at it. And that's a very important question to ask, to really see what exactly are they trying to accomplish and how do they differentiate? Because there's just so many projects in every sector. We need to know that they're going to be able to separate themselves.
Yeah, that's a great point. I'm curious for you guys, as you talk to your clients and other firms in the space, and as we talk to a lot of different folks, right? it's pretty much an education process to who you talk to. Has that changed at all just from the feedback? And obviously there's a lot of noise out there right now. So I'm just curious, as you talk to clients and various centers of influence in your network, what are they saying? What's the feedback these days? Is it pretty much consistent? Does it stay the same? What's different? I'm just curious about that.
Yeah, great question, Skyler. It is an educational process. And it's interesting for Matt and I, because we started with friends and family that truly just wanted an entry into the space. They had the money, they didn't have time, they didn't have the knowledge, and they didn't want to spend the 4,000 hours to not be buying Doge. We typically don't mention specifics, but some of the meme coins out there,
Sure.
right? And so they leaned on us to do that. But outside of Bitcoin and Ethereum and being able to buy that off of PayPal and Coinbase very easily, they didn't know how to get to any other level. So we spend a lot of time educating folks on what we're doing, why we're doing it, why we believe in the space. And many of the folks that limited partners that we brought on had no crypto experience, no crypto exposure. And so we say, hey, we'll come in. If you want Bitcoin and Ethereum, we encourage it. We think they're going to do phenomenal. We, go purchase them in this simple way, but we're going to take it to the next level. And we think over time we can exponential those bigger ones and bring more value, certainly.
And we still get calls with, you have, a handful of concerned LPs. Sometimes when you have the stuff going on with the SEC, it's a little bit different than what's happening last summer. But the great thing about starting when we started is all our LPs invested in the bear market. There's been bad news everywhere. So they've been a little bit insulated. It's made life a little bit easier for us. But yeah, on occasion, you still have to, just talk them off the ledge a little bit. Everyone's always wondering what's going on. And when you hear stuff about the SEC and a lot of the FUD, it really is very scary. And I don't blame anyone. We love taking calls and happy to talk to them anytime because we understand it's a new industry. It's a very inefficient market, like Jeff says, and it's there's a lot of moving parts. And we believe in full communication with all our LPs at any time, and we'll always take their call.
Yeah, that definitely is important, right? Obviously, they want the education. They've hired you for the expertise, and there's questions out there. There's a lot of noise, right? To your point, it's the markets trade from headline to headline these days, and you kind of have to be focused on what your key elements are in your strategy, and kind of leave the rest to let everybody else deal with. But yeah, totally agree with that. That makes a lot of sense.
Sure. Yeah, the LPs tend to follow the headlines, right? Yeah. So which is sentiment, which is demand. So right. You see the sell-offs, and that's when they're paying attention, and their interest is peaked. And so yeah, we just it's for those folks that are listening, and all you guys, former TradFi. It's no different than the TradFi. Our call volumes would absolutely spike at Fisher Investments when the market was down 4, 6, 8, in that once a year correction between 10 and 20%. And it's no different here.
Absolutely. Very exciting.
And you guys have a US based fund, which is interesting because it's, obviously you guys started at the right time. Since then, there's been a lot of headwinds in the US space. How do you guys look at, operating a US vehicle? What kind of, how do you see the regulatory stuff playing out? Does it affect your fund? And kind of what do you guys do to, kind of protect yourself, protect your investors?
Yeah, as of now, it hasn't affected us. Obviously, there's a lot of stuff going on in the US right now. Like you said, a lot of crypto firms are exiting outside of the US. It is a little bit of a scary time when it comes to that. But as far as our fund, everything's been just fine. We have great banking relationships. We've spent a lot of time on those. And yeah, it's been good. As far as crypto in general, I really think that it's almost good when you see businesses leave the US because hopefully you would think that would alert a politician or two to say, hey, wait a second, what are we doing here? Why are we sending all these jobs overseas? Let's rethink some of these regulations or what we're trying to do to this industry, because they send it abroad. It's still going to thrive without the US. And and then hopefully with that realization, we have some common sense regulation coming down the pipe. But from Globe 3 Capital's perspective, everything's been great so far. And we wanted to keep our setup simple. We're definitely US based now. Who knows what happens down the road, but we wanted to keep everything US based and simple for our first fund.
Yeah. And oh, go ahead, Mike.
Sorry, I was going to say, does trading become harder in terms of the venues that, options that you could trade with?
It hasn't yet for us. A lot of times when I'm doing trades, we're using DEXs, we're in DeFi. So that hasn't been a problem. Like I said, the lower market micro cap coins that we go after don't exist on Coinbase, and they don't exist in other centralized exchanges. So I'm able to utilize DeFi without a problem in different DEXs, and it's been great. Sometimes when you deal with certain, micro cap projects, you have to be a little patient when you're getting in and out of positions because the liquidity is not always huge. But that's the beauty of it, and that's the excellent valuations we're getting in on some of these projects. But so far, it's been great.
And Matt's actually done a great job. When we set this up, I was asking questions about FTX and Binance, and he's like, listen, we are doing nothing overseas. We're going for the heaviest regulated we can find. Anybody that has a bank charter is high on the radar list. And so the exchanges we had to use, the centralized, were all US domiciled, and that's really worked out amazingly well. I mean, at times I was describing just the other day to a neighbor, I feel kind of like we've been in Star Wars, where they flew through the Death Star and they had to turn sideways and flying through all the obstacles and came out, the other end, and we have avoided absolutely everything. Not avoided Celsius, Voyager, FTX, didn't own FTT. And yes, the market pricing gets hit, and thus our fund gets hit. That's acceptable. That's, typical bottom market formation, bear market bottom formation. We'll accept that. That's part of the volatility and the risk and the complexity that comes with the space. But as far as avoiding the big blowups, Matt's done a great job on that risk venture.
And that just comes with experience. And that's what we try to tell our LPs. They have real jobs and real families, and they don't have time to do the research that, I've spent thousands of hours doing. And I've seen that, I was there back when BlockFi was offering a very high percentage on Bitcoin. I saw the rate Celsius was offering. I'm not saying I knew what was going to happen, but certain things are red flags to me. When you see certain liquidity pools back in the day claiming they're paying 500 to 1,000%, it's too good to be true. It probably is, and it still applies in crypto. And that just comes with experience. And it's just, and a lot of people just can't get there. And so that's why they hire us.
Absolutely. Well, it seems like definitely there's a flight to quality, and you guys being, starting in a bear market and weathering the tide as far as that goes, and providing great risk mitigation and transparency to your clients definitely bodes well. And just from what I've heard too with others out there, just, pioneers who start out early, have great stories and great things that happen, but really just a great experience level, as you mentioned, going through this and coming out the other end with a unique perspective for sure.
Mm-hmm.
And what does it look like for you guys in terms of, let's say, like custody, asset management? What type of, products do you guys utilize in that end?
Yeah, custody is it's an ongoing situation. Right now, we use Coinbase Prime. We're very confident, with that setup. Also, with a lot of smaller cap coins, we do custody ourselves. We have I've set up a multiple vault situation with cold storage, where we kind of have a multi-sig, multiple vault set up. We take very good care of it. We don't really leave any on centralized exchanges. So we do our own custody for a certain amount of tokens that we have. And then we use Coinbase Prime for others, but we're also continually interviewing banks that are coming. There's banks that are coming out with bank charters, and they're going to be doing custody. And so we're constantly interviewing because we want to be able to have at least another option or two for custodians to make sure we can keep our LPs' money as safe as possible. But, that's what keeps me up at night. And that's why we feel that our clients' money is secure, because it's something that's very important and you can't take that for granted. And that's really number one on the list as far as what we want to make sure we do right.
And Mike, great question. What we're finding is we interview a lot of these custodians, and we, as Matt said, we constantly do. We think it's important, and they obviously, all the custodians in the space, start with the largest market cap. So you take a Fidelity, for instance. We spoke to them. All they had was Bitcoin, and they couldn't wait to get Ethereum. But a lot of the custodians, they may move down to the top 30, maybe top 50, where they're getting into the $1 billion range. And with Matt and I owning about 85% of our tokens at 200 million or below, we're hoping that those market caps move up. So as those guys are becoming more sophisticated, adding more tokens, adding more technology, getting more comfortable with the space, they're moving down through the top 50. Will eventually get to the top 100 and 200 as we move into them. But again, Matt and I have smiled the whole way along. That's where the complexity is, and that's where the opportunity is. So we often tell our new LPs that are onboarding, the opportunities in the complexity. When Coinbase can custodian the top 250 coins, that means demand is coming in, rushing in, and it'll be much easier to buy those. If you buy them ahead of time, you're going to have an advantage and you're going to lower your risk.
Yeah, and I think it's funny when we started, the first idea is I wanted to put everything with a custodian because I didn't want to have the responsibility for it. I was like, hey, I got to make sure this is done right. It sure would be nice to put it all with a custodian and not have to worry about it. But it's funny now that after everything that's happened over this last year, the stuff I feel most comfortable with is what we self-custody, because I know that is done right. And but yeah, it's just a continual process, and we're looking for better and better solutions. But there's also been some big custody providers that have gone out of business as well. So you have to be very careful there. And so far, so good. Everything's gone well for us thus far.
Yeah, to your point, there's been a lot of shakeup right in the provider space, and it's a continually being a multifaceted approach of multiple players that you may have to look at, or and then reevaluate as things happen. As your positions change, your strategy, you deploy your strategy, you have to look at different opportunities, right? To your point, self-custody, other custodians in the space, and as they change their mandate or their business changes, or unfortunately goes out of business, you have to look for other opportunities. And hopefully with the news and other folks getting into space, like, the likes of BlackRock and JP Morgan and others that are kind of feeding into this space, hopefully that'll push the needle to have better solutions and better opportunities for everybody, right?
Yeah, we certainly think it will. Exciting news and exciting for the whole industry. And you saw sentiment turn on a dime, for Bitcoin. And obviously that's the leader, and the rest will follow. So yeah, we're excited. And it's an interesting take between TradFi, who's fought it, and you see all the old quotes from Jamie Dimon in 2016 and 17 and Fink from BlackRock now saying, hey, can we be part of a consortium that steps in and becomes a custodian, and an exchange, and all the things that are important. And what will that do for the SEC that's worked with those guys for the last 20, 30, 40, 60 years, knows them, and is maybe bypassing the crypto natives. So it's exciting, and we think that'll open some doors. The U.S., to go back, Mike, to one of the things you asked about with regulations, the U.S. fell behind. I think that'll cause us to play catch up, which is perfectly fine, because that'll get us going. We'll be able to learn from all the others that stepped into regulations maybe a little awkwardly or not knowing, and we can catch up real quickly and even bypass them. And when that happens, then the whole world of digital assets opens up to everybody.
I love that. That's a really, really positive take. Definitely, because a lot of people are thinking, probably a lot more negative than that. So I love that perspective.
Well, and I think it's all about accountability. You want to have ownership of your own data. You want to be accountable for your own money. then you need to learn how to self-custody that. And I implore anybody that's willing to do that is just learn how to do it, because everyone's so used to trusting a bank and letting them do whatever they want with their money. They don't even know. They just think it's always going to be there. Well, there's going to be a time down the road, and Lebanon and other countries have already experienced this, where your bank is not always going to be there. And so, I really want to preach accountability to people, and don't be afraid of that, and definitely get after it. And it's one of the reasons why I love crypto so much. Yeah, maybe there's another sleepless night or two because you have to deal with all your own money. But it's very important and kind of the backbone of what crypto is all about.
Absolutely. And I know you guys are really heavy on the research front. So could you talk to us a little bit about, what type of stuff are you looking at when you're looking at new protocols? What type of data piques your interest?
Yeah, we were just talking about this earlier today. That's a great question. And I'll tell you, it's all over the map. I would say we do things a little bit differently. You have a lot of research entities, whether it's Blockworks and Masari, and a lot of, you can get a lot of data from one website that, that puts out articles and all kinds of analysis. But the years I've spent and the thousands of hours I've spent in doing research, I've kind of amassed a group of, let's call them our own trusted advisors. Whether it might be a handful of YouTube accounts, it might be a bunch of Twitter accounts. It could be, we have 30, 40, 50 websites that we access at any one time. And even though it's a little bit all over the place, I really like the setup because that's how we cross-reference things. There's plenty of crazy stuff going on, and you hear crazy recommendations, or you might hear of a project from some guy that you don't trust at all. But when you get a name one place and kind of run it through the system that we have, we're confident that, all the different, avenues that we have to do research, it's definitely not just one thing. That gives us more confidence in the project because we kind of, just back it up. Okay, let's, run it past here. And, but yeah, we do research all over, and it's just, we built kind of a set of, like I said, of accounts, websites, and people in crypto that we trust. And that's kind of been what we run all our protocols through. Obviously, we put our own, touch on it at the end. But yeah, that's really what we do with each project.
How do you see the space kind of? Sorry, go ahead, Jeff.
Oh, sorry for interrupting, Mike. I was going to say, it's really been an amazing intellectual journey. I don't think there's anything out there that is more challenging, and you just cannot gobble up enough information, as you guys know. In fact, one of our favorite quotes when we started this was from John Oliver. He said, "Crypto is everything you don't know about computers combined with everything you don't know about money." And for most folks, that's absolutely true, and it's a complicated subject. So again, Matt triangulates, but I think all the information, and then we spit it out, we talk about it, we go through it, we've got our strategy set, and we've got a bench we think is probably ready for, the next 6 to 8 months that we can't wait to get some of these projects incorporated. If any of ours fail, we need to expand to 20 tokens, etc. But I think one of the big advantages for Matt is in 2014, he bought his first Bitcoin. He says $200, sold it way too early. A lot of folks did, but that started the decentralization journey down the rabbit hole that we've all gone down, and probably most of the listeners have too. But it kicked off that intellectual pursuit by Matt, not to try and find the next best token, but as a hobby. And it turned into a money-making hobby. And then it turned into a money-making passion. And he had his businesses on autopilot. He said, God, if I spend an hour a day, I was swamped on those. So he got to spend 3, 4, 6 hours a day just pursuing things because he was passionate about it. And we think that's an advantage over somebody that's told, hey, go find the next Google in the crypto space, right? Some business analyst or crypto analyst. So you take that over an 8-year period, and you learn quite a bit when you want to. It's kind of like the books you read in high school that you want to versus the ones you're told to. You don't remember anything from the ones you're told to. So that's where we are now.
That's
How do
awesome.
you guys see the space kind of playing out? We kind of, I wouldn't say the L1 wars are kind of over, but how do you see like layer ones playing out? DeFi, how do you see it evolving? How do you see this space in general kind of changing?
Well, obviously, I do think we're going to get an ETF and multiple ETFs approved here shortly, to SEC's chagrin. I think it's going to happen. I think you're going to see a lot of institutions. They've already entered the space, but that's going to continue to happen. I think you're going to see kind of a merge from TradFi into DeFi into Web3. And it's going to be on an institutional level. You're going to see a lot of large projects and a lot of large companies start to use DeFi and kind of get it all intertwined. And once that happens, there's really no going back. Now, sometimes projects can sacrifice decentralization. We have a famous quote, you're either in crypto for the revolution or you're in it for the money. And we're definitely in it for both here. And the revolution we mean is just by the decentralization, the ownership, kind of the whole peer-to-peer setup in eliminating the middlemen. But once really the larger institutions in TradFi comes in, that's going to make it a lot easier for the average retail user to get in. So you never know, 3 years down the road, you might be able to walk to your bank and buy the top 1,000 altcoins that you want and just maybe have it up on your portal and be able to do it then. And so that's why we feel it's a great first mover advantage for Globe 3 Capital to get started now, and to build our network and returns and things like that. So it's going to be very exciting. But yeah, the institutions and that combination should make it easier for retail down the road, because the banks are going to they have to do something, and they're starting to embrace it. They've totally changed their tune. I mean, like I said, BlackRock said it was money laundering, was all about Bitcoin, and now they want to get approved for an ETF. So things change, and they change for the better. Sure, you might have some decentralization sacrifices, but it's about as good as we can get.
And to answer that question, Mike, I like to go back to Mark Andreessen, where he said software is going to eat the world. And he's actually quoted also as saying in the next, I think it's 30 or 50 years, I might be getting my numbers wrong, blockchain will take over the world. And when you back off of that a little bit, blockchain is simply software. It's the next iteration of the internet as well. And so we see how the internet has changed our lives, and we think blockchain will do the same and better. But when you really start unpeeling the onion of blockchain, you see it does all the things that businesses want. It creates efficiencies. It creates a better trust system. It eliminates middlemen. It creates more profit, if you will, once you do all those things. And when you bring those 4 components, and probably another 27 components that I just can't think of right now, into software, into a space, into business operations, they can't not do it, right? Businesses are so competitive and they have to stay so efficient. And if blockchain is the next level of efficiency, they're all there. Now, there's a big difference. Will they have private blockchains or public blockchains? Matt and I actually believe, private is for the most part probably dead. You look at IBM and Maersk, they had to unwind their private blockchains. Many others probably secretly are. And the public blockchains will get better, more efficient, faster, more usability, and more not control, but more ease of use by the businesses themselves, where they'll be able to trust it versus the private. And when that also happens, then you just see this explosion. So we don't know when it is, but like Matt said, TradFi is kind of the leader in pulling the space forward, and the rest are certainly going to follow.
That's great. Question for you guys on my side. Just curious, with AI, that's a topic that gets brought up on our side too, with many managers, and obviously there's tons of things out about ChatGPT. From your guys' perspective, what do you see, maybe opportunities or challenges, conversations that are being had on your guys' side about the topic, and how, being more efficient, running your business? Is there ways that you've thought about implementing or integrating AI into your ecosystem?
Yeah, as far as implementing AI for us, it's something we really haven't talked about too much. Obviously, it's a huge buzzword, as is crypto, and combining the two would make sense, but it's almost such new industries. It's almost even hard to fathom what the possibilities are. But what we can see coming down the road with these incredible technologies is, the middleman's going to be taken out, and you're going to have to stay ahead of these technologies, whether it's in crypto or AI. You're going to have to learn about these, and you don't want to bury your head in the sand, because it could be your job one day down the road that it replaces. So I'm very intrigued to see how they're going to be able to work together. I don't have any specific examples, but we do have a project or two that is in the data AI space that we do like. And we're definitely, keeping our ears open for different projects that are going to excel in the space that, combine AI with crypto.
Personally, I think AI is probably going to help build the blockchains, cryptocurrency, et cetera. But like Matt said, outside of that, it's hard to guess where it all goes. Will we incorporate AI bots to make decisions for us? Probably not a chance. We're more fundamental and value oriented. As Matt says, we like to read white papers. We don't read price charts. And I think AI is more, right now geared towards that rather than the thought process of bull, bear markets, macro, SEC, et cetera. But it'll be interesting to see where it goes. And there will be funds out there that incorporate AI into their decision making. I doubt it'll be us.
Yeah, makes sense. I agree. I think you have to pay attention to it, right? But it's not going to replace what your current process is. It can only enhance or augment what you're doing, whatever makes sense for you guys. I totally agree. It is an interesting topic for sure. But yeah, 100%.
Yeah, we actually got. Go ahead, Matt.
I was just saying, but it's something people should look into. Whether it's using ChatGPT and familiarizing yourself in it. Once again, you don't want to just say, "Oh, I don't want to, ever look at it. I'm going to bury my head in the sand and not pay attention." But it's technology that warrants your attention, so you don't get left behind.
Right. Just like blockchain and crypto, right? Kind of the same thought process.
Exactly.
100%.
Exactly.
Right. And we actually got fortunate, as Matt mentioned. We had a data analytics blockchain company that we, since day one, it was one of our first trades that we've owned, and they were associated with the AI space. So we're happy to see that. And gosh, I think it 3X'd for us at one point, pulled off a little bit, but we haven't chased any other AIs. You don't want to be late to the hype. If you get lucky and you're part of it, take it, and we'll see where everything else goes.
Very exciting.
What advice would you guys have for somebody starting out, brand new fund, new hedge fund manager?
Get in quick. Start quick. Good question. It's you don't know what you don't know until you do it, right? And so for Matt and I, we launched knowing that, hey, there's a high probability that we're going to be entering a new bull market. Well, the bear market bottom formation lasted a lot longer than we thought. Could have never anticipated FTX and blowing up, then the SEC kind of stepping on the throats of the innovators for a little bit. And so this bottom has matured, but it hasn't completely. Everybody can't say we're off the bottom yet, as confident as Matt and I are. So for us, it's still an opportune time. If you're going to do it, probably better now than in a year or two. Take the leap and start studying. There's a lot out there. There's a lot of misinformation, and you got to be able to sift through it and have experience. I wouldn't enter the space if this was new.
And for me, the number one advice I would give is to find the right partner. Jeff and I have been best friends for many years, and surprisingly, we still don't want to strangle each other yet. But the beauty of it is I would never have done this myself, and neither would he. And he handles the part of the business that's not my expertise. That's his expertise. He brings in the TradFi experience, the investor side of the experience. I'm on the crypto side. And we can really coexist doing exactly what we want. And a lot of times businesses can get overwhelmed when you have to do everything. and half the stuff is what you hate to do. But if you each have, let's say, 5, 6 things that you love to do, then it's been a really easy year, and we're super excited, but definitely find the right person to be able to work with. And that's my number one recommendation.
I think that's great insight, guys. That's challenges we hear talking to other fund managers, and they're trying to do everything and go it alone. And, it definitely is a team sport, right? Having great partners and team players that really can kind of, help each other and move things along and not get bogged down with minutia, if you will.
Sure.
And it's great when something pops up and, it's in Jeff's wheelhouse. I'm like, yeah, that's your job. And so he's on it. I love to delegate. He does the same thing to me too. So it's better to pass it on to him. It's great.
That's great.
Love it, guys. Where can people go to learn more about Globe 3 and connect with you guys?
Sure. Obviously, we have a website. Hedge funds are notoriously stealthy, so there's not a lot there. But Matt and I are very active on LinkedIn. So you could find Matt Lason, Jeff Embry on LinkedIn. Probably easier just to go to our LinkedIn company page, Globe 3 Capital, and you spell out Globe, the number 3 in capital, and you'll see both of us. We try and put some content up, not overwhelmingly, but at least 1, maybe 2 good articles that are either timely, interesting, educational a week. And then I do a Saturday morning crypto series of quotes like the one from John Oliver that actually kicked it off. I think we're up to 37 or 38 straight Saturdays. Almost last Saturday I almost missed, but so we're getting a neat following there. And feel free to send me your favorite quotes, and we'll get them in sooner or later as they're stacking up. But LinkedIn is a great place to find us. We'd be happy to connect with you, and happy to talk to anybody. It's such a fun space. Anybody involved in crypto just loves talking about it. That's what we do all day.
Love it, Jeff. Thank you so much, Matt. Really appreciate it, guys. We hope you enjoyed this interview with Globe 3 Capital Management. Please reach out to us if there's any topics that you'd like us to cover, or if you're looking to launch a fund, we could also help you out with that. Thanks for watching.